Hi everyone, and welcome to this week's Cape Berkshire Portfolio Update. The tail end of this week has seen a raft of economic data come through influencing the portfolios. Starting on Wednesday, we say that management survey indicators for manufacturing and services industries in both the US and UK came in more optimistic than expectations and a marked improvement from last month, particularly in the US. Thursday saw the European Central Bank hold interest rates for another session. The expectations are that a cut is due within the next few months. The US saw further outperforming results in terms of goods orders for December and a huge outperformance in the economy in the last quarter of 2023. Friday also saw positive US news in that core PCE prices, the US Central Bank's preferred statistic for measuring inflation, came in slightly under expectations and now sits under 3% year-on-year. Looking at how this has affected the portfolios over the week, we see that 5 out of 10 portfolios have outperformed their respective AEFI benchmarks in what has been a positive week for markets off the back of those positive economic readings mentioned. This works out on average to be 0.004% up on the week. Only one portfolio resulted in a negative return this week, R1 returning minus 0.05%, with the largest return coming from P5, returning 0.56%. At a fund level, we see that China has been the best performing region, where market stimulus measures have been announced and bank liquidity requirements reduced, providing and forecast impetus to their economy in the future. Alongside this, we see that 91 Global Gold has had a good return this week, returning 2.99% in a week where skirmishes in the Red Sea have provided a move towards the safe haven. At the lesser performing end of the scale, we see that emerging market government bonds, as well as sterling credit by the way of HSBC corporate bond, and the UK FTSE 250 index have returned a modest loss at around 0.5%. A quick recap to see how the week has impacted the performance figures since the start of the year. 8 out of 10 portfolios are outperforming benchmark, with the best performing being R5 and the worst performing being P1, as bonds have sold off more than equities over the last month. Looking over performance since the start of the year, we see that the best performing funds have been equities in Japan and the US, with positive performance of between 3.43% and 2.09%. As mentioned previously, the Japanese Central Bank held their policy committee meeting at the start of the week. However, they maintained a loose monetary policy, which did not move markets on the news. Although they were the best performing funds this week, gold and China are still the laggards over the month, with returns between negative 9.59% and minus 6.84%. This week is incredibly important to markets, with both US and UK central bank policy meetings taking place on Wednesday and Thursday, respectively. Furthermore, Wednesday holds the publishing of key China manufacturing confidence survey results, where a slight increase over last month is expected. We round off the week with US unemployment data, where a maintaining of 3.7% unemployment is expected. That brings us to an end for the week. Thank you very much for listening.